Hello, and welcome to your monthly market report for October of 2022. My name is Kate Rezebeck, and today David Childers and I are going to walk you through three of the most important topics in the housing market. We're going to be going over, will mortgage rates keep rising? What's happening with home prices, and what we're calling the shining star of the housing market, which is equity. So, we're going to be going over those three things today. And I have to say, this is probably one of the most important monthly market reports that you could watch in a long time. There's a lot going on in the housing market. It is a very pivotal time for both buyers and sellers, and they need your expert advice more than ever. And that's because there's a lot of economic uncertainty around us. And quite frankly, it is causing a lot of people to push pause on their plans. And they need you more than ever to be able to navigate this market. And so I want to start with a quote today that really helps frame that up. This is from Mark Fleming at First American, and it says, when the economic uncertainty dust settles, those buyers and sellers who are on the sidelines will jump back into the housing game. Demographic trends support elevated purchase demand in the years to come. So it's a question of when, not if, for the housing market. So if you're feeling pressure right now of a cooling or a slowdown in the market in your local area, and you want to stay connected to your buyers, being that trusted advisor, that expert is more important than ever because they're looking to you to make these decisions. Some people are stepping out, and when they step back in, they will look to you as the trusted advisor. So positioning yourself as that market advisor right now, the educator who can truly transform the lives of your clients, is more important than ever. And that's because they're seeing things like this happen around them. They're seeing the words crash, drop, falling, look out below, all of these things that are causing fear and concern. And we want to help you bring clarity to that because as the market expert, I can tell you in times of uncertainty, people follow the certain. So your relevant market opinion based upon fact is more important than ever for guiding your clients, helping them to step through this process, be a part of this process, and to make the best possible decision. They need you more than ever. And this monthly market report is going to help set you up for that success. So I'm going to start today by helping you answer the question, will mortgage rates keep rising? This is a big part of the fear and uncertainty that people have right now in the housing market, because take a look at what they're seeing in the media. They're seeing headlines like the U.S. housing market stares down an even bigger economic shock. Mortgage rates near 7%. Mortgage rates reach highest level since 2008. 30-year fixed rate mortgage jumps over 7%. These are all headlines that are out in the media right now. And this is the reality of a rising mortgage rate environment. And when people see this, they get scared, they have that fear, that uncertainty, and it causes them to press pause on their plans. So being able to break it all down and explain what's happening, why mortgage rates are rising, what's expected from the experts, and of course, how we can help our buyers and our sellers is mission critical right now. So let's jump into exactly that. So what we can see here, this is the Freddie Mac 30-year fixed rate from January of the beginning of this year all the way through today. And it says that mortgage rates rise for the sixth consecutive week. Those are those orange bars that you can see over on the right side of your screen. You can see how rates have been rising since the beginning of the year. And look at this sharp incline that we've seen over just the past 6 weeks. Mortgage rates are rising very rapidly. Now, what you're seeing here is a look back. So this is saying that rates are an average of 6.7%. That was released at the end of September, right before this recording was made. And that is a look back. So what we all with mortgage rates Like this, you may be seeing a number that's even higher than that today. That is very much the reality. But what we can see over time, regardless of it's this week or next week, is the trend is an upward direction. That is what is happening right now. So what I want you to do is take a look at what Sam Cater from Freddie Mac is saying about mortgage rates today. He says the uncertainty and volatility in financial markets is heavily impacting mortgage rates. Our survey indicates that the range of weekly rate quotes for the 30-year fixed rate mortgage has more than doubled over the last year. So that is a significant increase. They're climbing quickly. And the big question that a lot of people have is, why are rates going up so rapidly? Well, let's take a look at what's happening. This is a quote from Odetta Cushy from First American. And it says, the aim of Fed tightening is to curtail demand in an effort to tame inflation. And when it comes to the housing market, the Fed's actions are working. So what the Federal Reserve is doing, we know that they don't call mortgage rates, but what they are trying to do is bring inflation down. They're trying to slow the economy. So the moves that the Fed is making to slow the economy is having an impact on mortgage rates. Mortgage rates tend to follow. This is all about inflation. As inflation is high, mortgage rates tend to be high as well. And, we've said for a long time that inflation is the enemy of long-term interest rates. And that's exactly where we are today. So the Federal Reserve making moves to lower inflation is what they're trying to do. And until inflation is down significantly, we see mortgage rates rise. Now, what does that do? That has an impact on the housing market, which is very intentional by the Federal Reserve right now. So Odetta Cushy goes on to say, home sales, both new and existing, are falling. Builders have cut back production in response to rapidly declining affordability. We know that this is easing off on the demand. And annual house price growth has slowed from the peak of nearly 21% in March of this year to 16.7% in July. So we're seeing this cooling or slowing in the housing market as a result of rising mortgage rates. That is the reality that, buyers and sellers are facing right now. And, this has been a trend, even more rapidly over the past few weeks. So, what everyone also wants to know is what's ahead. What are the experts saying will happen to mortgage rates going forward? So let me break that down for you as well. Well, even 2 months ago, rates above 7% may have seemed unthinkable. At the current pace, we can expect rates to surpass that level in the next 3 months. This is a quote from George Ray at Realtor.com. And really what he's saying is that even a couple months ago, experts were projecting that mortgage rates would rise, but we weren't really even talking about 7%. So, as we're starting to see that tick upward, this is all due to inflation. We've been saying that for a while now. We have to watch inflation to see where mortgage rates are going to respond. And this is where we are today is, mortgage rates that are continuing to climb. So in a rising rate environment, the best thing we can do is help our buyers and sellers understand what's happening, why it's happening, and of course, what they can do to help navigate this rising rate environment. So I think this quote really is quite powerful. It's from Realtor.com as well, and it says, there's no doubt that the increasing mortgage rate will make home buying even more challenging. We're feeling that affordability pinch right now. That is loud and clear. But buyers may still find opportunities as these changes coincide with the time of year when buyers have historically found the best market conditions to obtain more bargaining power. So what does that mean? Well, with mortgage rates rising, it slowed down the pace of sales. At the same time, that has created more inventory or more options in the housing market. So buyers who may have been outbid more times that they can count or have been searching for that home that they just couldn't find, that home may be out there right now. And the frenzy of those multiple offer scenarios is truly behind us. So that's an opportunity for buyers and something that we need to be talking about as buyers hope to step into the market. Now, the challenge on the flip side is the affordability challenge. As mortgage rates rise, it becomes more expensive to secure a home loan. And that is the other challenge. So it's really important as well, if you have a trusted lender that you are working with, to make sure that your clients can speak with that lender, can work with that lender that you trust, who can help them find the right mortgage, the right loan product, the right mortgage rate, all of those different things that an expert can help guide them through. This is why we're talking about, in times of uncertainty, you need experts on your side, and you need to be that expert in the market. Connecting your clients to a trusted lender is a game changer right now and can help them navigate this process. We also know that, as affordability challenges are out there, that people need more down payment assistance. There are down payment resource options both locally and nationally that you can connect your clients to, and all of that can help make a difference as people start to navigate this market. Maybe it's even looking in a different area, a more affordable area. There's so many things that we can help with, but being that trusted advisor, being that knowledge broker, that educator in your market can really make that difference. And the truth is, so many people need to buy and sell homes right now. The demand is still there. It's just a matter of helping people navigate it in a challenging time, because your informed clients will succeed. And you get to be that leader, that driver in the process. And that is huge to opening up doors to anyone who needs to buy or sell a home right now. And I want to wrap this section up with this quote from Mark Fleming at First American, because I think it says it nicely. It says, while mortgage rates are expected to continue to drift higher over the coming months, that's what we're seeing right now, much of the rapid increase in rates is likely behind us. So that's huge. That's great news. Nationally, while month-over-month house prices may decline, annual house price declines are not expected, given the ongoing supply-demand imbalance and continued strength in the labor market. So that also opens up the question, what's ahead for home prices? I'm going to go ahead and turn it over to David, and he's going to walk you through our latest update on where home prices are headed.
All right, thanks, Kate. Let's talk about home prices right now. We started off this with Kate talking about uncertainty and how in times of uncertainty, people follow the certain. I think maybe one of the biggest questions that there's uncertainty around is what's ahead for home prices. Many people asking that. And, when we get that question, we're either going to answer that with certainty or we're not. And my goal over the next couple of minutes before I turn it back over to Kate is to give you what experts are saying right now about home prices, and really to give you the best information we have right now relative to home prices. So we'll do that, and we'll talk about that. And then before I turn it back over to Kate, I want to really challenge you on what's your story about home prices right now. But we're going to do that for the next few minutes. We'll start here. The root issue of what always drives house prices almost always is supply and demand. It comes from Dave Ramsey. We've talked about that quote before here on the monthly market report. But no doubt, what determines price in any category, it's not just real estate, is supply and demand. Now, the best way to show somebody that we're working with, maybe somebody that has this question, what's happened to supply and demand in this country relative to real estate in the last few months, is this graphic right here. The supply and demand ratio in real estate has changed very, very quickly. This is a measure of showings, which is going to be demand, and active listings, which is supply. And let me kind of back this up and show you how I would tell the story if I was sitting down with someone. I would sort of go, the last couple of years during COVID, we saw, a real estate market like we've never seen before. The meaning of home changed, interest rates dropped, and so many people said, now is the time we're going to buy a home because we need something different, or, the needs that our family or we have changed dramatically. So what happened? Showings on the left there, that's the demand side, that went through the roof. We saw pictures of lines of people lined up around homes and, bidding wars and all that. There was a tremendous amount of demand that was out in the market. And what happened with listings? Listings dropped, right? We've seen sort of a record low amount of homes on the market at any one time, causing bidding wars and price escalations, all of those things, but really showings through the roof and listings lower than they've been in quite some time. And what's happened? We've literally seen the inverse of that, which this graphic represents. Showings down nationally right now, just over 12%, and active listings up over 27%. That has not been the story of the last couple of years. That's an inflection point in our business. And, I think most of us know that. I don't think I'm saying anything that anybody listening right now doesn't know, but here's what I am saying. This is a great way visually to show someone what exactly has happened in real estate and tell that story, help my team tell that story, help, people that I'm working with understand that story. That's critical to this, conversation around prices. So next piece of this around prices is the question, what are experts saying? I'm going to give you kind of a full range of experts. I've got 4 quotes here that we'll go over, I think, that kind of sum up the real estate market. I'll start here with Ivy Zellman, someone that we cover on the monthly market report. She says Ivy Zellman projects U.S. house prices will fall 4% in 2023 and then another 5% decline in 2024. So Ivy Zellman, sort of this icon in the business saying home prices are going to fall next year and the following year. A couple of things I'll say about that. First, Ivy Zellman projected home price depreciation this year, and we didn't see it. I haven't talked to Ivy. I don't know why she's calling for depreciation this year, but here's what I do know. When somebody like Ivy comes out and says home prices are going to depreciate 4% next year, they get all of the media attention. Now, I'm going to stack her projections up with all the other experts that we follow, and we're going to look at that in comparison, but no doubt, news like that dominates the real estate cycle, but there are people like Ivy saying, hey, home prices are going to depreciate. Let's hold that right there because I'll come back to it here in just a minute. George Ratu from Realtor.com, he says this, not surprisingly, deals are not getting done with the sale of new and existing homes declining for over half a year, given that demand is cooling due to high borrowing costs. Kate talked about that in rising interest rates, incomes falling behind inflation, and still limited supply pipeline. It's become increasingly clear that prices have to decline to restore market liquidity and balance. Okay, so George saying, hey, no doubt deals are slowing down. I think, anybody that's selling their home, anybody that's buying a home needs to understand the dynamics there and what's important to them. And he says it's become clear that prices have to decline. So let's continue this story. Another person saying, hey, decline in home prices. Third, Mark Fleming from First American. While the market's considered overvalued, may need to adjust to the not-so-new reality of higher mortgage rates, housing market fundamentals still support a moderation of annual house price appreciation rather than a sharp decline. So we just talked about Ivy Zellman and then Realtor.com, George there talking about depreciation. We have Mark Fleming from First American saying moderation and price appreciation. So we're starting to see, experts say a number of different things, some saying depreciation, some saying, marginal or appreciation, it's sort of anemic growth, very, very little. And we'll talk about that when we compare all of the projections here in just a minute. Last one here, John Paulson, hedge fund manager. We're not at risk of a collapse today in the financial system like before. It's true, housing may be a little bit frothy, so housing prices may come down or they may be plateaued, but not to the extent it happened before is what he's referring to, not the extent it happened in 2008. So we have sort of this range of opinions from experts about the market. Why is this important? A couple of reasons why. First, experts are saying, hey, this isn't 2008. Some are saying, hey, there's been a frothy market where prices in some markets are likely to decline. And then you have some saying, you know what, I think I see prices moderating. So if we start to take this picture, and this is really what I want to communicate to you today, is what's the picture right now of those that are forecasting prices. And what our team has done is what we always do. We take a collection of the experts that we follow, we put them together and say, okay, what does that show us? Here's a look at the 2023 home price forecast when you look at Fannie and Freddie and MBA and the home price expectation survey and NAR and Zellman there. We talked about calling for depreciation. Well, I want to go back to what I said before. Who gets the press when they come out with something like that? It's somebody like Ivy Zellman, Fannie or Freddie that are calling for 4% appreciation don't get that press. It's the person that's calling for the depreciation that gets that. But if you look at the average of all of these forecasters, including the depreciation forecast, 1.8% appreciation. So if you were to ask me right now, what's the forecast going into 2023 for home price growth? Best case scenario is probably around 2% price appreciation, in home prices. And so I think looking at that and saying, people that I'm working with, people that are thinking about, what's going to happen to home prices, maybe people on my team, whatever the case may be, I want to be able to bring that to them and show them this is what's happening nationally with home prices. Now, critically important to look at the local level where you're at and say, what do we think is going to happen with home prices across the country? Now, I want to sort of shift into that for a couple of minutes here and talk about what studies have come out relative to home prices in major metropolitan areas. And then I want to break down the home price expectation survey, which I think does a really, really good job of sort of taking this average of what all economists or a great group of economists are saying relative to home prices. So first is Zillow here, appreciation and depreciation going into next year. For the next year, a number of MSAs, metropolitan service areas, think about that as a city or region, depending on the area and their level of price change. What they've come out with is they've said, we believe in 618 MSAs in this country, we're going to see appreciation, 257 depreciation, but most of that 257 in depreciation is less than 1%, 1 to 3%, very marginal depreciation, some in the 3 to 5 and 4 higher than 5%. So you can go, in all of the slides that we use in the monthly market report, if you go into the notes, you can grab that study, go research it yourself and dig deeper into that if you want. Here's the reason this is so important. There are forecasters out there talking about depreciation. What happens in a news cycle and what happens as this gets delivered is it turns into everybody's calling for depreciation. And that's certainly not the case. Not everybody is, and not every area of the country. And that would be my message right now. Now, again, I'm going to take it back to the market that you're in. It's critically important to understand that and give your relevant market opinion based upon what you're seeing. So that's Zillow right there. The second one is the home price expectation survey. What do we see here? We see more forecasting appreciation than depreciation. So what the home price expectation survey is, every quarter they survey top economists, top experts in housing across the country and say, where do you believe the market is going? Okay, so if you look at the analyst and the economist and all of those that are a part of this survey, you see more forecasting appreciation than depreciation. But we want to look at those and want to say, okay, that is a reality, just like we saw in the Zillow study. We're seeing that come through. Okay, so we're getting sort of a similar trend here, not to the degree, not everyone calling for it, but we do have people calling for it in the home price expectation survey. They even go out further than next year. They go through 2024, 2025, 2026, and I'll give you the first look at that right now. And what do you see right here? Still depreciation being called for in small slivers in 24, 25, and 26, but more appreciation every year, meaning more and more people being optimistic about the market and appreciation. But at the end of the day, even in this scenario in 2024, 86% of the experts that were surveyed in the home price expectation survey are calling for appreciation, 86, 91, 96, meaning the overwhelming majority of these economists and these experts are calling for home price appreciation. Now, I think the important thing to remember here is what is driving supply and demand. There are dynamics that we've talked about extensively on the monthly market report, the dynamics of supply in this country and new builds coming to market, the reality that we're underbuilt in residential real estate, and the reality of demand, which is driven by the millennial generation right now reaching and moving through their peak home buying years. The largest generation behind baby boomers that are creating a tremendous amount of demand for homes across this country. So before I turn it back over to Kate, here's what I want to challenge you with is first of all, what's your story? What's your story with your team? What's your story with those you're working with? What's your story to yourself? and there's sort of maybe three or a few stories that are out there. First of all, there's the story that, I react to the headlines and I see something, but I don't read the report and I don't go in and dive deep into it to really understand it. And that's why the monthly market report exists, to give you the facts of what's out there. But there are a lot of people right now reacting to headlines and thinking, gosh, I don't know what's ahead, which you can look and see this. Okay, clearly this is what's starting to happen. I'm going to call it the blindly optimistic person, or the one that has blind positivity and kind of don't look over there. Let's just look ahead and let's not worry about it. And I don't think that's a wise way to go about it either. And then there's maybe this third way of, what is my relevant market opinion based upon the facts? We talk about that a lot on the monthly market report, creating a relevant market opinion based upon the facts. You can take all this information I've just talked about with home prices, and you can create your relevant market opinion. You can deliver expert advice in a market like this, where it seems very, very hard to deliver expert advice. You just have to be connected to experts. So hope that helps you understand home prices right now, what experts are saying, what's on the horizon for next year, and I'll turn it back over to Kate.
Thank you so much, David. I think as we talk about a rising mortgage rate environment and the questions people have around home prices, people ask the question, should I buy a home right now? And one of the big ways that we can have this conversation is to remind our clients how home ownership wins over time. Home ownership is truly a long game, especially as we compare it to renting, and equity is a primary driver in that. So I want to start this section with this quote from First American, and it says, U.S. households own $41 trillion in owner-occupied real estate, just over $12 trillion in debt, and the remaining $29 trillion in equity. The national LTV, or loan to value, in Q2 2022 was 29.5%, the lowest since 1983. Homeowners had an average of $320,000 in inflation-adjusted equity in their homes in Q2 2022, an all-time high. So an all-time high of equity in our homes. That is a major financial cushion for those who are homeowners. So let's use this next quote to break down why this is important. And I think it says three big things. This is from Selma Hepp at CoreLogic. For many households, home equity is the only source of wealth creation. As a result, recent record gains in equity and record declines in loan-to-value ratios will provide many owners with a financial buffer in case economic conditions worsen. In addition, record equity continues to provide fuel for housing demand, particularly if households are relocating to more affordable areas. So several big things coming up here. First of all, home equity is a huge source of wealth creation. The net worth of a homeowner is 40 times greater than that of a renter. So when you start to compare home ownership to renting, it is a huge differentiator for people's long-term wealth gain. Also, recent record gains in equity are a financial buffer in case economic conditions worsen. We are not set up for a wave of foreclosures by any means, but what we also know is that for anyone who might be in a challenging situation, they have equity in their homes, and that financial buffer can help them sell their home versus have to go through, a foreclosure process or be in a really challenging situation should economic conditions worsen. And in addition, the third thing, equity is a fuel for housing demand. It is what's keeping people in the housing market, keeping that demand high. We talked earlier about, when the economic uncertainty dust settles, equity is the driver that can help people fuel a move, relocate, whatever it is they need to do, whether their needs have changed, their personal situation has changed, whatever it may be. Equity is huge in that. And what we can see in the latest release from CoreLogic is that the national average for home equity gain across the country is over $60,000 just over the past year. Now, this is Q2 of 2022 compared to Q2 of 2021. So we know that it's a look back. And I hear you when you say a lot has changed in the housing market since this data was released. But overall, $60,000 overall is a significant gain. And it's something that's creating this cushion for homeowners over time. And, if we break down this report even further, we can see, you can see that $60.2 thousand, the average equity gain for U.S. homeowners. That's a gain of 27.8% in just that year over year. Total $3.6 trillion in equity that Americans are sitting on right now. That is huge. And to double down on the overall gains, that quote in the bottom right-hand corner says the total average equity per borrower has now reached almost $300,000, the highest in the data series. So very similar to what we saw before. Every institution looks at equity a little bit differently in how they calculate those metrics. And we always put the source links in our slides so you can go back and look at those methodologies. But $300,000 for the average borrower, the average mortgage property, is very significant. So as we start to think about the long game of home ownership, even if we start to see month-to-month fluctuations in prices, the average homeowner is sitting on significant equity that can really change their situation. It can change their life as people go through challenging times or they want to make changes. Equity is a huge driver. And, if we look at the percent change in home prices over time, this is where it becomes the long game as we start to talk about what's happened over the past 30 years. Well, this is the percent change in home prices as of Q2 of 2022, going all the way back to 1991. So a 30-year look, the national average home prices have increased by 290%. That is massive. That is when we say, home ownership is the long game. Home ownership wins over time. In a 30-year period, given all the ups and downs that have happened along the way, home prices are up 290%, in some places significantly higher than that as well. So that is a significant source of wealth and growth for a homeowner. And, the question becomes, if this happened over the past 30 years, do you think it's going to be any different over the next 30 years? If someone is questioning, should I buy a home? This is a very, very powerful image to help them make a confident decision. History certainly doesn't always repeat itself, but we can learn quite a bit from it. And over a 30-year period of time, home values have increased significantly. And, the alternative to this, we've said it before, is rent. And look at how rent has skyrocketed over that same period of time, roughly 30 years here. You can see how much monthly rents have increased, and that is exponential. And so when someone's asking, should I buy a home? You can either put all of that money over time into rent and not get that return, or invest it in home ownership for that return on your investment. And that is huge. And well, we know that everyone purchases a home at different times for different reasons. We know that there are certainly affordability challenges out there right now, but the real crisis right now is renting. As we look at how exponential this increase is over time, we really want to communicate out how much power there is in home ownership. And truthfully, it's not just a financial benefit of home ownership, because home ownership truly changes lives. There are so many non-financial benefits of home ownership. And, these are just a handful of them, but it's so important to remind potential buyers of the security and stability that comes with this investment in home ownership, the privacy, the personalization in home improvements. Truly making it your own is huge for someone who really wants to invest back in themselves, in their communities. Civic participation is a big benefit of home ownership. As you stay in your community over time, the value that you can add and the value that you can gain from just being a part of the community. There's, proven health benefits to home ownership, and even the financial education that comes along with that as you start to learn how to manage that debt over time and to pass that financial education and the financial wealth down for generations is really a game changer. So as we look at everything that's happening in the housing market right now, we look at rising mortgage rates, we look at home prices. It's really important to wrap it all up in a bow with the long-term benefits of home ownership, because we can surely prove out that home ownership has value over time. It's financial, it's non-financial, and it's truly changing lives. So with that, I'd like to wrap up our monthly market report. Thank you so much for joining us, and we look forward to having you back again here next month.